Welcome back to Bunnex Investment Group. In this video, we are going to talk about one pair, one pattern, one strategy. And this is going to use several custom indicators. The first one being the Traders Dynamic Index, which is shortened as the TDI. So basically, this is to confirm our entries, and we need to find the market bias. So market bias is actually done using counting of levels and several methods of validating peaks. But in this particular video, we are going to use what we call a Btmm dashboard. We once talked about this indicator, and it's up for free in our free Telegram channel, which I'll leave the link in the description box below. So basically, how do we go about this process? So we always say trading always starts with a process. What is the initial process that you take before you enter into a trade? That's what is actually important. If you have a process, it means you can hold on to something over and over again, and that is where consistency starts from. So this is euro against the JPY, and we can see the market is going up and is going down and so forth. This is how the markets moves. They actually trend downwards, trend upwards, and they can as well chop. So what do we need? We need to find the trend, or we need to find a point that we term a peak formation high or peak formation low. So what the Btmm dashboard does is it plots for us a peak formation high and a peak formation low. When this happens, it doesn't mean that this is going to hold or this is the accurate point of reversal. Otherwise, we were going to convert this particular indicator into a robot that was going to trade for us. So basically, this is to show us that we now have a more higher probability occurrence to see the market going to the downside unlike to the upside. And this is it can change its positions, which we call repainting, and that's not what we are in for. We are in for to have an idea or to have consistency of how we locate our peaks. So after you install the Btmm dashboard, it actually comes on the chart like this, whereby it actually lists the pairs that you inputted whilst you were installing it. So in this particular case, these are the pairs that I look at, and basically it gives us the name of the pair, then the status of the peak formation high or peak formation low. These are the two columns that are important to us. All these are of no use within our strategy. So when it writes 3 PFL, it actually means it has given us a peak formation low 3 days ago, a peak formation low 1 day ago, and so forth like that. So on Euro JPY, it's saying 9 PFH like that, meaning that a peak formation was issued 9 days ago. So whenever a peak formation arises, the next thing is now to look for a pattern away from that peak. What are the patterns that we need to look for? We need to look for M's and W's confirmed on the TDI, on the Traders Dynamic Index like that. So on this Monday, it was the 27th of November. On Monday, a peak formation high was issued, and after the day of peak formation high, we are not interested in finding an entry. That is actually to give us more time to see if that peak formation is a valid one. So the day of peak formation, high or low, is not the day of trading, but the days that comes after that particular day. So in this particular case, on Tuesday, we started to look for patterns. What type of patterns? We've said we need to see confirmed M's and W's away from these peaks. Confirmed M's and W's, we need to see on the Traders Dynamic Index, we need to see a shark fin whereby the RSI line or the green line goes outside the bands like that, and then it goes inside the bands, and it will be preferably a bounce on the moving 50, which is the yellow line, and then it creates the second leg. whilst doing so, we need to see a drop of the relative strength index like that, and then on the charts it doesn't matter, we need to see a drop of the relative strength index in their pairing like that. So this was actually a valid point of entry. We know that a cycle has 3 levels, to the downside or to the upside, before it reverses. So we need to see if our pattern is going to be issued at a position that is going to satisfy, or that still has room before the market rotates or the market reverses. So in this particular case, that was actually a point of entry. We can see there was day 1 of drop, day 2 of drop, day 3 of drop, and at day 3 we now start to anticipate a reversal. As you can see, the market hasn't given another peak formation, meaning that we are waiting for a peak formation low so that we can go to the upside. Let's have more examples, since for us to fully comprehend, we need to fully understand how everything goes. So let's take these pairs that has peak formations away that could have given us our patterns. This is Japanese pound against Japanese yen, and on pound against Japanese yen there was a peak formation on this particular day. On the following day there was an M pattern. Was it a valid M pattern using the TDI? No, we need to see relative strength dropping, which was not issued at this particular point. So going forward, we can see that we had a shark fin where the market pierced outside the bands, and then it came back inside and it gave us a second leg, meaning that this was going to be a point of entry on the second leg. So it's, in summary, we are saying see a peak formation high or see a peak formation low. After that, you need to see an M pattern or a W pattern depending on the market context, and then you enter after you confirm that particular pattern in the direction of the peak, basically like that. So you need the Btmm dashboard, you need the traders dynamic index, and you need the charting as well, and then you need your patience and your discipline to follow all these rules so that you can see an equity growth, a consistent equity growth. On that note, we've come to the end of our today's video. I'll see you in the next one, and have a blessed day.